Hello everyone, welcome to Investonomics. So in today's video, we will talk about the 20 EMA intraday trading strategy. I will share one of the most simple yet effective intraday trading strategy. Of course, there are certain basic rules that you will have to follow for this strategy to work. So make sure you watch this video till the end. And that being said, let's begin. So for this strategy, we are not going to require any indicators besides the 20 exponential moving average and Japanese candlesticks. So it is a price action based strategy. Now, if you can recall, in my last video about 5 important price action rules, I discussed a point about key entry levels. A key entry level is any point on the chart where we see significant buying or selling interest. For example, an EMA line could be a key entry level, or it could be a support or resistance area, or it could be a trend line. And apart from that, in my short video about candlestick psychology, I shared very important aspect about candlestick wicks. I told you that the upper and lower thin lines or wicks or shadows at the top or bottom of a candlestick, besides telling us the high and low prices of a candlestick, it also tells us about the rejection of the higher and lower prices. So I'm going to link both of these videos in the description. Make sure that you go watch these videos after this one. Subscribe to the channel and hit the bell notification so you don't miss out on any future videos. Now coming back to the video, we are going to be incorporating these 2 price action rules into our 20 EMA strategy. These are some of the prerequisites for this strategy. Number 1, this is a short selling strategy. Now we could use it to go long as well, but it works best when we are short sellers in the market. The second prerequisite is that we are going to be using it on Nifty and Bank Nifty. So these are basically 2 indices that we are going to be using this strategy on, because these 2 indices are most volatile and we need volatility and liquidity for this strategy to work. Now you can use it to trade in stocks as well, but just make sure that the stock you choose is both volatile and liquid. Now how do you find out if a stock is volatile and liquid? You can check the volatility using the average true range indicator. On the indicators tab, you just have to search average true range and you will find it. So any stock, in my definition, any stock that has a ATR above 10 is quite good for this strategy to work. Other than this, to check the liquidity, you just have to look at the volumes. So if you see high volume transactions in a particular stock, that tells us that the stock has good liquidity. So this is how you can find out about both volatility and liquidity in a particular stock. Now, what do we need for this strategy? We need, number 1, we need Japanese candlestick bars. Number 2, we need 20-day exponential moving average line. So this blue color line on the charts, you can see is the 20 EMA. How do you set it? You just have to search EMA, exponential moving average. Any particular EMA will work. And once you have set it, you just have to press right click on the mouse and go to settings. And here in the input side, the length should be 20. The third requirement for this strategy to work is that the candle must be above the EMA lines, not below it or touching it. So you see here, there are certain candle bars on your chart. So for this strategy to work, the candlesticks must be above the 20 EMA line, not touching it or not trading below it. Right? We are short sellers. When a particular candlestick is far away on the upside from its EMA lines, it shows signs of a divergence. It tells us that a stock might be overbought. So then we have a short selling opportunity in that particular stock or indices. The fourth thing that we require is that the candles we are going to be using. What are the candlesticks we are going to be looking for? Number 1, it has to be a bearish candlestick which has a long upper shadow. For example, you see this particular candle here, it is a bearish candlestick and it has a long upper shadow and no wick or shadow on the bottom of this candlestick, because it is the upper shadow or the wick which shows us the rejection of the higher prices, not the lower wick. So because we are short selling in this particular stock, so we are looking for candlesticks that have a long upper shadow and little to no lower shadow. So it will tell us that the bears are gaining control and we are seeing some rejection of the higher prices. So what are the candlesticks? It could be a gravestone doji candlestick, it could be a normal doji cross candlestick, or it could be a long bearish candlestick with some upper shadow, or it could be a dragonfly doji, or it could be a shooting star candlestick, or it could be a long legged doji. So these are the candlesticks that we are looking for. So these are certain requirements, certain conditions that we have to meet for this strategy to work. The candlestick must have no lower shadow until and unless it is a doji candlestick. And lastly, the time frame that we are going to be using will be the 5 minutes chart. So now let's understand what the strategy is and how it works. So we have the Bank Nifty chart, we have the 5-minute Bank Nifty chart. So let's start from here. We are seeing that the Bank Nifty is trading above the 20-day exponential moving average, and we have this first candlestick. So it is somewhat of a doji candlestick. So it meets our first requirement, and also it is far away from the 20 EMA line on the upside. It's not touching the EMA line, and it's far away from it on the upside. So once this candlestick is formed, we are going to be shorting this stock. So Bank Nifty was trading around, the Bank Nifty closed around 42,760 levels at this point. And after shorting it, the Bank Nifty almost fell by 200 points. Now moving on, we have another doji candlestick. So this is somewhat of a long-legged doji. We see a long leg on the upside. So this was another perfect opportunity for us to go short in Bank Nifty. And after shorting, you see, we saw a significant fall again. Now let's see this area. For example, we have a couple of bearish candlesticks, all have long lower shadows. So we will not be going short here, right? And also all of these candlesticks are very close to the 20 EMA lines in this particular zone. Now moving on, here we have a bearish Marubozu candlestick. So this one also works because it has no lower or upper shadow, which also tells us that the seller have gained control and they have quite strong grip on the markets. Now here you can see this particular candlestick has some lower shadow, but what was the condition I told you earlier? I said that if a candlestick has some lower shadow and if it's a doji candlestick, then we can accept it, right? So here you see this is a gravestone doji candlestick. It has some body on the lower side and it has a long upper shadow. So after the formation of this candlestick, we could have gone short in Bank Nifty again. Now this one we will ignore because this is a green candle. This is a buy candle. So we will ignore it. We are only looking for red bearish candlesticks. Now again here we can see this candlestick has some lower shadow. So again we will be ignoring it. Now moving on, let's look here. So this candlestick has some lower shadow, but it has a long upper shadow as well. And it is also somewhat of a shooting star candlestick, right? A shooting star candlestick in itself is quite bearish. So again, we can make some exceptions when we have clear confirmation signals from the market. We have a shooting star candlestick here and with increased volumes. So we can, incorporate this candlestick into our strategy. Or we could have waited. We could have simply ignored this candlestick. And in the next session, we got a bearish engulfing candlestick. So we had two confirmations here in this particular area. So again, we could have gone short here. Here we can see this candlestick has a long lower shadow. So we will ignore it. Moving on. Here you can see there is a doji candlestick, a gravestone doji candlestick. And from here, from this particular point, we see 200-300 points fall in Bank Nifty. Now all this particular area you are seeing on the chart, this is Bank Nifty trading below the 20 EMA levels. So we will be ignoring this particular zone here. So this was the strategy, guys. I hope that I was able to make you understand what is the strategy and how it works. Why we have chosen to the 20-day exponential moving average is because if you have noticed, if you paid attention, you can see that that any particular stock or any particular indices have one certain characteristic, that it always tends to pull back towards its exponential moving average levels. So whenever a particular stock or an indices is trading too far, is stretching too far from its 20 exponential moving average levels, it will always go back towards its 20 exponential moving average level. So that is why these are the two things that we need. We are looking for a candlestick confirmation and we have our 20 EMA levels. So that will show us a divergence in the particular indices or stock that you are going to be trading. And based on that, you're going to be going short in any particular stock or indices that you wish to trade in. So before we finish this video, guys, I have one request. On this channel, I share several different trading strategies with you from time to time. And I'm doing all of this for you guys, for my community. Like, I seriously do not make any money from these videos because I am not getting enough views on these videos. So what I try to do is that I try to, vary my topics. I try to make videos on topics, which can get views outside of the trading community from the investor community as well. So I recently made this one video about the impact of COVID-19 and wars on the Indian stock markets. So every video that I make on this channel is for the benefit of you guys. So if you want to support me and if you want to show some support to the channel, next time you see a video, I want to make one request. Next time you see one of my videos, I want you to click on that video and watch some of that video and leave a like on that video. So that will go a long way in helping me and supporting my channel. So I hope this video added some value to your overall trading journey. And with this being said, I will be signing out. Thank you very much for watching, guys. This is Saurabh. You are watching Investonomics. I will see you in the next video.